What's going on, everyone? This is Stephen Place with Precision Volume Alerts. It's December 9th, 2021. I'm feeling a little bit festive today, as you can tell by this hat. The kid loves it, so I got to wear it. We're going to talk a little bit about crypto and some of the very recent and very new events that have started happening. So on December 9th, Evergrande defaulted. Evergrande is a property developer inside of the People's Republic of China. And they are not able to have enough payments to pay the debt that they owe. So why does this matter for crypto? Over the past, let's just say year and a half, there's been this FUD, this fear, uncertainty, and doubt surrounding the crypto ecosystem as it relates to Evergrande. So I'm probably going to butcher this a little bit, but the basic idea is you have a stable coin, which is called Tether. And Tether has assets that are backed by probably commercial paper. And the issue with that is commercial paper is a very small space. It's an institutional kind of trading environment. And so a lot of people just hadn't heard of this. They hadn't seen them as a party to a trade at all. And so the question was basically, what do they own? And one of the rumors that's been going around for a while has been Evergrande. That they were using for commercial paper. Now, they've denied this, but we don't know because Tether hasn't audited their books. From what I can tell and the data that I have seen, I'm just trying to get all the disclaimers out there. From everything I've seen, they have not completely audited their books yet. And that matters because if Tether has a systemic risk, it can pile into Bitcoin. And that can lead to mass liquidations. And it's not just about whether or not this happens. It is whether everyone else thinks it's going to happen. And so you start seeing a run to the exit. And if liquidity disappears, you see a bid drop significantly. Okay. So that's my super serious cryptocurrency analysis. As you can tell, I'm a very serious analyst with this very serious hat on. But aside from that, we'll look at some screenshots, and then we're going to hop over to a Bitcoin proxy play. And I'm going to show you how I've been using my roadmap to identify key pivot levels on this stock. It's a very tradable stock, both to the short and long side. The options board's very liquid. Okay, so first up, let's hop over to 3333, which is going to be the Hong Kong code for Evergrande. And so this, you look at this chart and you say, oh, no one could have possibly seen this coming. So Evergrande, back in 2017 was trading at $32. It's currently trading at $1.80. The news hit today that they're going to default. Okay. So what I'm watching in relation to this are a few things. The first is just Bitcoin as it relates to the US dollar. Now, a couple things I want to point out. You can use our roadmap inside of the crypto space as well. So as an example, if you take a look at the LVN, the low volume node right here, and you say, that's a pretty interesting level. Oftentimes we see rejections off of LVNs. I wonder if that lines up with anything. And the LVN was basically the low on crypto when it got absolutely obliterated a couple days ago. So as you can go and tell, we have seen price responses against this level in a couple months ago. So here's, it's pretty close right around here. And then we have another one right here. And then we have an area just above that, right around here where it started to lift off. Okay, so we've also got another LVN right around here, and you say, oh, that's pretty interesting. I wonder if prices responded to this at any time. And here we are at this price response, and then this price response right there. Okay, so that's pretty good. Those are very good pivot levels. Those are very profitable pivot levels that you can work with. If you can't short Bitcoin proper, you've got Bitcoin futures and other things like that. Even if you don't trade crypto, and I'm primarily a stock and options guy, you have to watch this space because it is large enough to affect other markets. If there's a risk-off event in crypto, it absolutely can trickle over into tech stocks and things like that. So it's a good risk appetite measurement. Okay, so A couple things to look for in the crypto space. You want to watch USDT relative to USD. So this is the Tether US dollar pair, and it's a stable coin. It should stay pinned at $1. So if this starts to see significant volatility, then something weird is going on. You can also compare Tether to other stable coins. So you can do USDT relative to USDC. Is that how? Yeah, there we go. I'm not even sure that's a real print. I'm going to go into a short term. If this print is right, and I'm not sure it is, we've already started to see a little bit of volatility and some bids drop out relative to other stable coins. So if you continue to see money flow out of Tether and into other dollar-related stable coins, I know I'm butchering some of the language here. There's going to be some crypto purists in here that are saying, oh, it's not exactly that. It's close enough, okay? But if that starts to matter significantly to us, it does start to matter because it shows a mass exodus here. As an example of mass exoduses, here is a trade that crossed today where $1 billion in Tether went from the Tether treasury to Binance. Okay. So is this indicative of more money flowing out of this particular system and avoiding any sort of systemic risk? That's a good question. Okay. So we don't know yet, and we still don't know. As an example, here's a press release from the CFTC back in September, I believe it was. I'm just going to double check the date on this. October 15th. And so we don't know if, I don't know if the news has changed on this, but something very interesting right here. The order here recognizes that Tether has not completed an audit of the Tether reserves. All right. So that's the risk that I see. Okay. Now, if all of this blows over, okay, and Tether is fine and Bitcoin holds up, I think that will lead to a massive unlocking of upside in crypto, because that is one of the major overhangs and systemic risks that everyone, including myself, has been considering. And if that goes away, then the perception of downside risk goes away, and then we start to see a lot more upside. Okay, so this is a very interesting spot right here. Even if you don't follow crypto, you probably should right now, just in the short term, to see how this is going to play out, just to make sure that this systemic risk doesn't spill over. Okay, so a couple different proxy plays you can look at. My favorite is Mara. So you can look at the two blockchain plays that I watch are Riot, and you've also got Mara. And I want to showcase how well looking at volume-based indicators allows you to get a significant edge in a lot of these stocks. Now, I've cleaned up this chart. I've taken everything off, so hopefully I can get everything lined up as well as I can. But we're going to just simply look at the volume profile, and then we're going to look at the anchored VWAP, the volume weighted average price against key pivot levels. So Mara had a really nice run from 32 all the way up to $80 a share. And since then, it corrected about 50%. That's just the nature of these momentum beasts, right? That's the kind of price action that is normally exhibited. So a couple different things we can do. First off, I'm just going to show you, I'm going to zoom in right here. And on the right side of the screen right here is going to be the volume traded as a function of price rather than a function of time. Okay. Now, we've got this very clear volume shelf and almost a double distribution. So I would consider that like a no man's land. So if you take the lower end of that volume shelf and then you take the upper end of the other volume shelf, you can see where that no man's land exists at, okay? And you can see that those two levels have recently acted as key price and support. Price, support, and resistance. There we go. You got that right. So you can see how it's been acting. And right now, what we've seen over the past few days, we saw a counter trend bounce, and then we saw a rollover from that no man's land. That's indicating to us and to me that we have continued to see sellers show up in this name. Okay. It could just chop out right here. It just could base out, and then we get new buyers in and more stronger hands as we trade sub 50, but that's not the evidence that's currently being shown right now. So the next thing you can do is you can look at the high volume node right here at $36 a share. All right, so that's going to line up with the most recent pivot support right here. Okay, so these levels they're very clean right now. We're not seeing a whole lot of just the stock blowing through it either to the upside or downside. So there are initiative buyers, and then we've got initiative sellers, and we could just start knocking out a little bit more of a range. Now, if this most recent low doesn't hold, because what we've seen in the past is that everyone feels like a champ when they absolutely nail the bottom, and then they feel like a chump when we retest and overshoot the lows, and then you have better holders of the stock coming in and willing to hold longer. So it's a very distinct possibility that, if we roll over, we could see further downside with a momentum divergence, and that could be a little bit more of a tradable low. So where would that line up? Well, I would start looking at the LVN, the low volume node right here. Okay, and as we can see, it's pretty close, but that's when we've started to see a little bit more price responsiveness from the most recent range that was put in back in August through October. Okay. Now, what else do I want to throw on here? The volume shelf right here, and maybe just a little bit above that, okay, has been shown to bring out sellers here and here and here. Okay, I know this chart's getting a little bit messy, but I just want to showcase some of these. So we've got a pretty good roadmap to work with, even though this is not a runaway chart, right, where it's just going straight up and you feel like a genius for buying it and then it goes to 100. You can easily trade the volatility here. You can trade the range very nicely. Now, what are some other things that we could look at? We could look at the volume weighted average price against the most recent swing lows. So what we can do is slap on this one right here. And then we've got this one right here, okay? And again, I don't really know how well these are going to work. I'm not trying to curve fit, so I'm just trying to do this on the fly for you. But as you can tell, this one right here, and we'll just make it green, has had reinforcements, okay? This area where we had the LVN, and of course, the volume nodes and things get developed over time. So some of the price responses are the things that created the LVN, and that's why we look at it. But we also have the volume weighted average price along with that price support level. That was basically the springboard, okay? That's a really interesting, I just want to showcase this a little bit more. If you look at the 20th of September right here, I hope you can see that, and we'll just make a yellow arrow. Okay, right here, I guess that's green. There we go. We found price support. Everyone felt like a champ buying the dip. What happens? We overshoot the lows to the downside, run those stops, get into stronger levels, and that's where it shoots off from. Okay, that kind of pattern plays out so many times in the market, and you absolutely have to pay attention to it. So what else can we get from this? If you are looking for a longer term trend change, you're going to have to watch the anchored VWAP from the most recent highs, okay? And look at this. We're going to make this one red because that is where price was exceptionally responsive. That first touch of that anchored VWAP from the highs found very responsive sellers into that, okay? So that tells me that as of right now, sellers are in control. The fact that we had a price response that was very aggressive as we traded into 36 tells me that there is a lower level where buyers are willing to step in aggressively. And it's very possible that we knock out some kind of a trading range over the next, few months. What I would like to see is an overshoot of the lows. I'm not sure we're going to get it, but if we get an overshoot of the lows, then I will look to get long. Okay. If it makes a higher low right here, because we are coming into a gap fill level along with a local LVN, which is going to be, where is it? Okay. So right there, and I'm going to try and point this out as best as I can. That LVN right there is where we saw price response, actually just now, but it's also coinciding with a gap fill from a couple days ago. So that's just a smaller point of reference to keep an eye on. But so what we can do with this roadmap is we can make it what I would call path dependent. Okay, so we're not saying like right here is a screaming long in Mara. We say, okay, if this thing makes a higher low and it starts to rip, if we come back into $54, especially very quickly, then you can probably get away with buying some puts. If it just straight shots higher, you're wrong on that one, but that's not what the roadmap is currently telling us. It tells us that there's going to be continued trapped buyers from that push to $80 a share. Okay. And then from there, you can then make another pivot low. And maybe if we run back up, I'm not sure if I can we'll throw some arrows. So let's just say we get a hard push right here, all right? And that's where the sellers start to show up, and maybe a little bit lower than that. And then if we can retest 47.75 at the lower end of that volume shelf and where price support has come in, if that holds, then you've got the potential for an attempt at least of seeing that move to 60, let's just say 68, maybe to $70 a share. Okay. Now, conversely, you could play it like if we overshoot the lows, come into that local LVN as well as price support, maybe just a little bit lower, that's probably going to be a good place to put on some long risk. Okay. And if we bounce right there and we start to, stall out as we come back into that LVN around 42, then, all right, you can take some profits and maybe look to reload into a pullback. Okay. And then the bullish case would then be, all right, we're going to come back, retest this level. Okay. Bring in fresh buyers, and then we see that push. Okay. There's always a possibility that it just goes straight to zero. There's always a possibility it runs to 100, but given the current roadmap that we have, it's pretty neutral. We've seen buyers and sellers at very key pivot points, and you can use this to trade the stock, right? And you don't have to absolutely nail it on to run to 100. You can pull 5 points out of the stock, 5 times, and all of a sudden you've captured 25 points. All right. That's the kind of power that our roadmap has. So if you want to get more training on this, and if you want me to help you with trading around this roadmap, we've put together a free training. Below this video is a link that will get you instant access to a training that we've put on about how to look at volume as a function of price rather than time. And you'll see some of the setups that we've used in it as well. So I highly encourage you to go watch the training. If you wish, then after that, you can come work with me, become a client at PVA, and you will get all of our setups. They include a call option or a put option if we're short, long stock. We don't do short stock. We just do straight puts. And we also have stop losses involved with risk management. You can get access to our total portfolio as well. So that's all I've got for today. Happy holidays. Merry Christmas, everyone. Take it easy. Have a great day.